Every generation believes they are living through something unique. But when it comes to financial markets, history has a way of repeating itself. And right now, many experts believe we are watching one of the biggest bubbles in history unfold before our very eyes. The question is, are they right? Or is this just another case of fear and exaggeration? To answer that, we need to first understand what a bubble really is. A bubble happens when the price of an asset rises far beyond its true value. It usually starts with a great idea or innovation, something real, something valuable, but then speculation takes over. People don't buy because they believe in the long-term fundamentals. They buy because they think they can sell it to someone else at a higher price tomorrow. This cycle feeds itself until reality eventually strikes. And when it does, bubbles burst sometimes with devastating consequences. Think about the Dutch tulip mania of the 1600s. Tulips were beautiful, but people started treating them like gold. At the peak, one tulip bulb could cost as much as a house. But the bubble eventually collapsed, and prices fell to almost nothing. Fast forward to the 1990s. The dot-com bubble. The internet was real. It was revolutionary. But investors started throwing money at any company with .com in its name. Stock prices went to the moon, even if the company had no profits, no customers, and no real business model. When the bubble burst in 2000, trillions of dollars of wealth disappeared. Then came the housing bubble in the 2000s. Everyone thought housing prices would go up forever. Banks lent money to almost anyone. Investors packaged risky mortgages into complex financial products. And when reality hit in 2008, the entire financial system almost collapsed. So what about today? What bubble are we living in right now? Some argue it is artificial intelligence. AI has taken the world by storm. Companies like Nvidia, Microsoft, and Google have seen their market caps explode. Billions are being poured into AI startups. But here's the question. Are we in an AI revolution or an AI bubble? The technology is real. AI is changing industries, boosting productivity, and creating new possibilities. But are valuations getting ahead of reality? That's what skeptics worry about. Others point to cryptocurrencies. Bitcoin, Ethereum, and thousands of altcoins have created massive wealth and massive losses. Bitcoin surged past $60,000 before crashing back down. And then it climbed again. Some call it digital gold. Others call it the biggest bubble in history. The truth? It might be both. Crypto is here to stay, but not every coin will survive. Just like the dot-com era, many projects will go to zero while a few giants remain. And let's not forget about the stock market itself. Indexes like the S&P 500 and NASDAQ have reached record highs. Some investors argue that valuations are stretched to the extreme. Price-to-earnings ratios are higher than historical averages. Tech stocks, in particular, are priced for perfection. And if growth slows even slightly, these valuations could come crashing down. Real estate is another area raising eyebrows. In many cities, housing prices have skyrocketed beyond what average families can afford. Low interest rates fueled a buying frenzy for years. But now, with rates rising, cracks are starting to show. The question is, will housing see a gentle slowdown or another crash like 2008? So what makes a bubble dangerous? It's not just high prices. It's the belief that prices can never fall. It's when investors say, "This time is different." That phrase has appeared in every major bubble in history. And every time, it has been proven wrong. But here's the twist. Not every period of high prices ends in disaster. Sometimes, innovations do justify higher valuations. Think about the dot-com bubble again. Yes, many companies went bankrupt. But Amazon survived. Google survived. And the internet truly did change the world. So even if we are in an AI or crypto bubble, the long-term winners may still create massive wealth. The trick is separating hype from real value. So how do you know if you are investing in a bubble? Here are some signs. First, when people who know nothing about the asset start buying. Think of your barber, your taxi driver, or your cousin suddenly giving you stock tips. Second, when people talk more about quick profits than long-term value. Third, when valuations make no sense compared to earnings or cash flow. And finally, when fear of missing out becomes the main reason people invest. Right now, Many of these signs are flashing in different parts of the market. In AI, crypto, real estate, and even meme stocks. That doesn't mean they will all collapse tomorrow, but it does mean you should be cautious. So, what can investors do? The first rule is simple: don't chase hype. If everyone around you is getting rich quick, it's probably too late. The second rule: diversify. Never put all your money in one stock, one coin, or one sector. The third rule: focus on fundamentals. Invest in companies that actually make money, have strong balance sheets, and provide real value. And the fourth rule: think long-term. Most bubbles look obvious in hindsight, but almost impossible to time in the moment. If you invest in strong assets and hold for the long run, you are less likely to get wiped out. Now here's the big question. Are we really living through the biggest bubble in history? The honest answer is that nobody knows. Markets are unpredictable. Some people will say AI is a bubble. Others will say it is the birth of a new industrial revolution. Some will call crypto a scam. Others will say it is the future of money. But one thing is certain: bubbles always feel like opportunities until they burst. History teaches us that greed and fear drive markets more than logic. When prices rise, greed takes over. When prices fall, fear takes over. And most investors get caught in the cycle. They buy high and sell low. The ones who succeed are those who remain disciplined. Those who invest based on value, not hype. Those who stay calm when others panic. So maybe the real lesson is this: it doesn't matter if we're in the biggest bubble in history. What matters is how you prepare and how you act. If you are reckless, you could lose everything. If you are disciplined, you could come out stronger than ever. Imagine two types of investors. One jumps in at the top of the bubble, chasing fast money, and loses it all when the market crashes. The other stays patient, waits for opportunities, and invests in solid companies when prices are low. One ends up broke. The other ends up wealthy. Which one will you be? So as you think about today's markets, AI, crypto, stocks, real estate, ask yourself this: are you chasing hype? Or are you building wealth for the long term? Because the difference could define your financial future. If history repeats itself, there will be another crash. There will be another bubble that bursts. And there will also be new opportunities created from the ashes. That's how markets work. The key is being ready when it happens. So what do you think? Are we living through the biggest market bubble in history right now? Or are we just witnessing the birth of a new era of innovation? If you found this video valuable, make sure to hit the like button. Subscribe to the channel for more insights on investing and money. And tell me in the comments, what do you think is the biggest bubble today?